Hey guys, welcome back to my channel and welcome if you're new. So today we are going to talk about how to research a company's stock before investing. So let's get started. This video is both for total beginners as well as if you're an intermediate investor, if you started maybe a little bit ago and you want to learn the proper way to research a company before investing. So let's get started. First things first, you want to take your time researching. You want to be patient because you got to remember this is your money that you're putting in. So, you want to be careful especially if it's a large sum of money, you want to take your time, you want to be patient and really be ready. With that being said, let's get started. First thing you're going to want to do is basically research a lot of general info about the company. And throughout this video, I'm going to be using examples and specifically of companies that I really like, that I own a lot of stock in, companies that are my favorites. So I'll be using some really good examples. So for general info, let's start with Apple. So you want to know what their product or service is. So we're all pretty familiar with Apple. A lot of us have iPhones or MacBooks and iPads. So since we're consumers, we kind of understand what they do. You want to understand what industry the company's in. So for Apple, we know it's a technology company. You want to know if the company operates globally or only in some countries, for example, US and Canada. How many employees the company has. Does the company have like 10 or 20,000 employees? Or Apple's a huge company, has I think close to 150,000 employees. And then some other information like how long ago was the company founded. I think Apple was founded about 40 to 50 years ago. So that kind of gives you an idea that the company's been around for a while. So next thing is the financials. So for this one, I'm going to use Target as an example. Target is a company that I really like and I own a lot of stock in. So when it comes to researching a company's financials, the first thing you want to look at is their annual income statement. And you want to look at the trends. So for Target, for example, in 2019 and 20, they did about 75 to 78 billion in sales. And then if you notice in 2021, they jumped to 93 billion in sales. So things like that can be a really good indicator of the company's financial health when you see that their annual revenue, their top line is growing very rapidly or it's growing steadily. It gives you a really good sense of security that the company's headed in a good direction. And then some other things you want to look at is what is the company's leadership forecasting to be the sales, or what kind of forecasts are they putting out about, next year, the next 5 years. Next thing is company news. So for this one, I'm going to use Tesla as an example. A lot of us are huge Tesla fans already. So when it comes to company news, maybe something like when you look the company up on, Yahoo News, Google News, is Tesla, are they coming out with a new electric vehicle that's supposed to come out later this year? How is that going to impact the company's sales and whatnot? Or when it comes to news, it could be something good or it could be something bad. So in the recent couple months, did something bad happen in the company? For example, did some leadership like a CEO recently leave who built the company up a lot? So reading a little bit about the company's news, what's happened recently in the last 6 months to a year, and what big things are expected to happen in the next 6 months or a year, that can really help you understand the company a lot better. Okay, so now that you've researched some good general information about the company, the financials, you've looked up some good news articles about the companies, about the last year and the next 6 months or year, the next thing you want to do is you want to look at the stock chart. So I'm going to show you here. Let's take Apple, for example, here again. So first thing you want to do is you want to look at the 5-year chart. This gives you a really good idea of how has the company's stock done over the past 5 years. So this is what you can, I'm not saying past performance is a good indicator of future, but it can kind of give you an idea of like how is the company's stock done the last 5 years. So maybe this can give you ideas of if you expect it to do the same in the next 5 years or for the duration that you hold it. Next thing you want to look at is shorten your time frame, look at the 1 year chart. How has the company's stock done in the most recent 1 year? Look at the 3 month chart. So the 3 month chart, it's not a very good indicator of the company's stock performance, but it's more if you can see, are you getting it at a good discount? So say you're really set on the company and it's been really down in the last 3 months, so you can get an idea of, I'm getting this company at a really good price. So that's what I like to use a 3 month for. But for looking at the overall stock chart, I really like the 5 year and 1 year view more. Next thing you want to look at is volume. What does volume mean? It simply means, on average, how many shares of the company's stock are traded every day. So this threshold can be different for everyone. For me personally, I don't like to own anything when the volume is lower than 500,000. Why? Because let's say for any reason you need to sell your investments and you need to pull out. If a company's stock volume is really low, the liquidity can be hard, and you don't want to be, in a position where you're trying to sell your investment and get the cash and you can't have a buyer. So whenever a stock has a average volume of 500,000 or 1 million plus, you can kind of feel that security that you'll have really good liquidity. If you're ever trying to sell your stock, there's going to be a buyer there that'll immediately, buy that off of you and you'll be able to sell. So I personally have a rule for myself of minimum 500,000 a day. But ideally, I like to have investments where the average volume is more than 1 million. Moving on, next thing, market cap. This is really important. So market cap stands for market capitalization. It's basically what is the total value of the company, and it's calculated by the total number of shares times the share price. So market cap can be really useful for helping you understand how big is the company. So for example, some of the biggest technology giants like Amazon, Microsoft, Apple, they can have market cap of in the trillions. I think Apple's something like 2 trillion, and I think Amazon and Microsoft are right under 2 trillion. And then a lot of the companies in the S&P 500 are going to range from 20 billion market cap to anywhere from 150, 200 billion. So there's no, set threshold, but in my experience, I've learned that a market cap of over 20 billion or 25 billion generally means a company is pretty stable. It's been around for a while and it's not going to be too volatile in the short term. And when the market cap kind of starts to go under 10 billion or under 5 billion, it's a little more risky. It's a smaller company. It can be a little more volatile in the short run. And then anything with a market cap of under 1 billion, that's a little more risky. That's gonna kind of tell you that it's a really newer company. It might have IPO'd in the last couple of years. So it'll give you a good idea of how big the company is. Next thing is, so you want to invest in a company that you're comfortable holding long term. So when you've done your research, make sure you feel good enough about the company. You know what they do and you know where they operate and whatnot, because you're going to want to hold long term. This has a lot of benefits. If you hold for, at least a year, you're going to pay significantly less taxes on your investment gains. And when you hold it for the long term, it kind of blurs out the short to middle term volatility a lot. And then your return on average is going to be better if you hold it for a 2, 3, 5 year period. So, as long as you're not buying something today and selling it next week. So you'll really lower your tax bill, and you can, on average, expect a better return over time. Okay. And then the last thing is, guys, don't go all in at once. There's no benefit of you going all in at once. So I'm just going to make up a number here. Say you have $2,500 you're looking to invest in a company. There's no benefit in you just throwing $2,500 in there like right off the bat. So maybe something you can do is start with taking a position of 500, and then maybe at the beginning of each month you can put in an additional 250, or when there's a big market dip, you can take advantage of that and increase your position and lower your average cost over time. So this is one of the mistakes I made, guys. Back in 2020, I really liked a pharmaceutical company that was working on a COVID-19 vaccine, and I went in with a really heavy position and I ended up regretting it. And later I learned I should have just, slowly increased my position over time, and I would have ended up in a much better place. Okay, that is it, guys. Please comment if you have any questions or if there's anything you want to discuss. I'd love to discuss with you. And if you have a specific company you've had your eyes on and you'd like my advice on, I'd love to tell you what I think. And make sure to like and subscribe. It really helps so I can keep bringing you more good content like this. All right, guys. Well, remember, if you plant your seeds early, you can really grow your wealth over time. See you next time.